This video is based on a newspaper article in the Globe and Mail, and in the article they suggested that Jasper and Jane may want to consider purchasing a whole life insurance policy to increase the value of their estate or the amount of money that's going to go to their children. And the only thing I'd say to that is make sure that you've got enough money yourselves before you purchase that type of a policy. So I've done the work here, and I'm going to jump ahead. I've done the planning work. They're retiring here around age 59. Their income is good in these years, and then they're going to have a surplus income here in these years, and we can see the amount of money here. If I look at their net worth right now is about $1.8 million, and in today's dollars, that's going to grow to about $3.2 million. Now, keep in mind, we are saving this money. I'm not assuming that they're not spending it, so this is extra income, and they're saving that. Let's just take a quick look and see what happens if they just spend everything that comes in. And now we can see that there is no surplus income here. And if we look at their net worth, again, it's gone from 1.8 to about 2.5, so a little bit less than previously. Now let's go and add in an insurance policy, and we're going to purchase a $500,000 joint last to die whole life insurance policy. And I've gone here to Sun Life, so here are the clients. These are their ages, 54 and 50. We've bought a whole life insurance policy for $500,000. It's a joint last to die, so meaning the death benefit's not paid out until the last person passes away. And when we do that, they reduce the premium, or the premium for the insurance is equivalent to a single person age 43 buying that policy, and the premium is about $13,000 a year. If I scroll down on this, what we can see, here's the cash value, so this is money that you can borrow against or withdraw, and this is the total death benefit here, and you can see in both cases they're growing. At year 10, we've put in about $130,000, and the cash value is only about $62,000. If we go down here to year 20, we can see now we're about $427,000. So I often think of whole life insurance, it's almost like a GIC with free life insurance if you're going to hold it for 20 years or more. Now let's assume that Jade is going to live until about age 90. So let's scroll down here to year 41, and we can see at year 41 the death benefit is about $2.2 million, and we see the cash value here. Now, if I use an investment calculator, I can see if we're going to deposit $13,000 a year over 41 years, at 5.9%, I'm going to get a value of $2.2 million, which is what the death benefit would be. So the insurance is giving me about a 5.9% rate of return after tax on death. Now, if this was, if we're looking at the cash value, the rate of return is about 4.85%. Let me calculate that now. So we can see $1.6 million. If I go to year 41, the cash value here, about 1.6. So let's come back to the plan now and take a look at the estate. We can see here when Jasper passes away, Jade's going to receive about $1.6 million. And then down here where we purchased the insurance, Jade's going to receive about $1.2 million. So about $400,000 less. And that's, of course, because some of the premium was used to pay insurance rather than to accumulate assets. And for that reason, there's less tax owing. But let's take a look and see what happens when Jade passes away. We can see still Sam and Sarah about $1.3 million, down here $1.2. Now in this case you can see we're spending everything that's coming in, and you can see the amounts here. Each child is going to receive about $900,000 versus $1.2 million. And let's just do one final check. So here we're back to stick to our spending plan and save the rest. And down here we've stuck to this spending plan, save the rest, but in addition we've purchased the life insurance. So, and we can see the difference. There's about 1.3 up here for each child, down here 1.5 for each child. So just to conclude, if their goal is to maximize the estate for the children, then I think it does make some sense to consider the whole life insurance.